Today's lecture is on preparation of financial statements with adjustments. Earlier we considered preparation of financial statements without adjustments. Today we'll be learning how to prepare financial statements with adjustments. If you have the book, so this is starting from page number 458. Today's lecture is based on what I have distributed today. Financial statement for trading businesses with adjustments. So the objective is to teach you how to prepare income statement and statement of changes in equity or statement of equity and the balance sheet using the adjustments. Trial balance is given and also adjustments are also given, and you are required to incorporate these adjustments to the trial balance and prepare financial statements. So that is the objective. And these are the steps to be followed. And now I am focusing the examination. As I said earlier, this is the key area to be tested in the exam, whatever the exam, right? And firstly, you are required to read the question. In accounting questions, application questions, the real question is given at the end. At the end. So if you turn to the next page, it says required. So that is the thing you should understand. Read the question and understand what is required. So it is basically given at the end of the question, at the end of the trial balance. So this is the thing that you need to read. So you are asked to do something. So then after that, you go through the trial balance. You go through the trial balance. You are going through the trial balance with an objective. Otherwise, you are reading the trial balance without any objective. So if question is asked to prepare income statement, statement of owner's equity and the balance sheet, so you are reading the trial balance and adjustments to prepare these statements. Say for instance, sometimes you may ask to prepare only the income statement. So you are not required to do the other things. That's why you must understand what is required. I know in some years I have given a trial balance and the adjustments, and students were asked to prepare income statement. But some students, they don't read, they don't follow what I say, they spend their valuable time to prepare income statement, statement of owner's equity and the balance sheet. No time for other questions. Right? So that is what is required. Alright. Go through the trial balance and the adjustments also. Then you can understand the question, what is given, what are the items given, what are the adjustments to be made. Right. Then next step is determine the double entries for adjustments. So all the adjustments means these items have not been incorporated into the double entry system. It is given after preparation of the trial balance. So therefore, you need to determine the double entries for adjustments. Then incorporate adjustments to the trial balance figures where possible. and then note down the other entries by the side of the question. You have enough space, you can note down the other entries. Other entries means the items that cannot be incorporated into the trial balance. Then enter trial balance figures and other figures arising from adjustments to the financial statements. And I always say, when you enter a trial balance item, then put a tick mark, right? Then it is easy, because in an examination situation, you are very, very nervous and you are thinking of the next question and time and all sort of things. So then, as a result of this mindset, maybe you include purchases and you don't include purchases returns. You may skip by oversight. So that can be avoided if you tick them off. Once we enter the trial balance item in the income statement or the balance sheet, then tick it off. Right. Then of course, additions and subtractions, right? Yes. In financial statements, if examination question is there to prepare financial statements, the marks are allocated only for the correct entries. Of course, you will get marks for correct gross profit, net profit, and so on, but marginal marks. So therefore, what is important is to collect more marks, right? That is the objective. And also, the adjustments involve two accounts or two entries, more than one entry. So therefore, more marks for adjustments. Trial balance items, of course, just transporting from trial balance to the financial statements, less mark. All right. So this is the program for today. Then we will see how this question how we make these adjustments and try to learn. Illustration number 15.5. This illustration includes adjustments. Trial balance is given as usual, and after that there are some adjustments. Some adjustments are given here, and then you are required to make these adjustments into the trial balance, and then final figures to be incorporated into the financial statements. Income statement, statement of changes in equity, and the balance sheet. So first thing is to make adjustments and indicate where we are going to record. Inventory on hand, one item, this goes to balance sheet as well as income statement. So balance sheet and income statement. And here advertising expenses, accrued advertising expenses 1,200. Accrued amount is a liability, goes to the balance sheet, and the advertising expenses account to be adjusted. Accrued expenses also given here. So therefore, where is advertising expense? Advertising expense here. So add this amount. Advertising expense 1,200 to be added. right, and this amount to be recorded in the balance sheet, but in this question accrued expenses are given here. So then we can add 1200 to the accrued expense amount given in the question. So now this is over. Interest expense accrued, then check whether there is anything relating to interest. Yes, it's here, 315 paid and another 150 payable. So add, and addition to accrued expense 150. So once it is done, this amount shows the total accrued expenses. Delivery vehicle 20% depreciation, work out 20% of delivery vehicle. So delivery vehicle, find the delivery vehicle here, 30,000, 20% annual depreciation works out to 6,000, then depreciation amount, depreciation account, depreciation delivery vehicle 6,000 to be recorded in the income statement, and the corresponding entry is in the balance sheet, accumulated depreciation delivery vehicles 6,000, these are the double entries, balance sheet. And here office equipment value is 19,500, 10%. Depreciation means 1,950. Office equipment 1,950, 10%, and accumulated depreciation office equipment 1,950. Then buildings 5%, work out 5% of the cost, building 80,000 and 5% of that is 4,000. Depreciation of building amount 4,000, income statement one entry, and the other entry is balance sheet, accumulated depreciation building amount 4,000 goes to the balance sheet, right. Depreciation buildings. Then last one, prepaid expenses expired on 31st December 2011. The amount is 300. During this period, during the year, prepaid expenses expired is equal to 300. So therefore, prepaid insurance expense is here. The prepaid expense referred to this amount. This amount has expired during the year. That means it has already been converted into expense. So therefore, minus prepaid expense, and another item will appear in the income statement as insurance expense. Insurance expense. Insurance expense 300. This amount to be recorded in the income statement. So now we have completed all the adjustments, and we know where we are going to record these things and the correct amounts in the trial balance. We have all the correct amounts in the trial balance, including adjustments. Now follow the same procedure. Same procedure. That we have followed in the preparation of financial statements. Right. Then this is my income statement. Income statement, then title of the statement, that is first line, name of the business, and then title of the statement, income statement, and the third line is to write the period, counting period for the year ended 31st December 2011. 2011, start with sales. Sales from trial balance, and tick that off. I am not going to do that because I have already taught you how to do it. Then tick off the figure in the trial balance, 210,000, and less sales returns. Amount is 1050. 1050. Net sales 208,950. Here decline, and then less cost of goods sold. Cost of goods sold we will have to calculate starting from opening inventory. Opening inventory is 24,000. Next, purchases, and we have returns. Therefore, first column 250, less purchases, returns 600, 94,650 net sales, followed by freight inwards, freight inwards, freight inwards 495. Then find the total. It is 119,145 less closing inventory. Closing inventory is given 31,500. Then finally, the cost of goods sold works out to 87,645. Then gross profit. Gross profit is the difference between sales revenue and the cost of goods sold. It is 121,305. Then add other revenue. Other revenue includes commission revenue. Once it is included here, take it off from the trial balance. Discount revenue 300. Rent revenue, that is rent revenue, discount revenue, rent revenue how much? 7,200, and total 8,550. That is my first part of the income statement, and find the total here as well. 129,155. Then expenses. Firstly, distribution expenses. This question consists of additional adjustment entries. Therefore, better to leave 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, for safer side. Administration expenses, similar number, 1, 2, 3, 4, 5, 6, 7, 8, right. Then finance expenses, all right. So now we are looking at the trial balance, and we marked the items to be included in the income statement as IS. So we take the items that are marked for the income statement, right. Then advertising expenses. Advertising expenses, look at the trial balance. Now it is the total of these two, 3,600. first column. Then we have vehicle running expenses in the trial balance. $8,700, and also depreciation. This is the way it is written: depreciation, depreciation expense, delivery vehicle, depreciation expense, delivery vehicle, 6,000, and administration expenses. We have office expenses, $8,250. Office expenses $8,250. Next, insurance expense. The amount we identified. Office staff salaries, office staff salaries 43,500. Then again depreciation expense, this is office equipment, office equipment depreciation 1,950. Then another depreciation expense, buildings, administrative purpose, therefore under administration expense. Postage expense, postage expense is 1,950, and move on. Then finance expenses, we have discount expense. How much? 215. And next, bad debt expense, that is 900. Interest expense, amount is 465, right? How do you get 465? In the trial balance, the original amount is 315, and we added another 150, that is the amount payable or the accrued amount. So now the total expense is 465. I think now we have taken all the amount for the income statement from the trial balance, and now time to add these figures. Find the total. B214 to B216, 18,300. Administrative expenses, B223 to B228, total is 59,950, and financial expenses, it is 1,580. Now final column, the last column, find the total of total expenses. It is 79,830, and last item, net profit. Net profit is the difference between 129,855 and 79,813. Then how much is it? 50,025. Double underline because this is the last item in the income statement. Here also, like other questions, you can find some blank spaces. Don't worry about it, leave it as it is. Then the statement of changes in equity. Then first thing is to write the title. Pui statement of changes in equity as at 31st December 2011. Center. Then first item in the income statement of changes in equity is the opening capital. Opening capital is 1/1/2011. That is the amount given in the trial balance, 116,550, and take that amount from the trial balance. Now we have the net profit for the year at that amount, 50,025. Then how much you get? 166,575. Then is there any drawings? Yes. Less drawings. Amount is 5,000. Amount is given in the trial balance. Then finally capital on 31st/12/2011 minus 5,000 is 161,575. Double line. Yes. Now we have completed the income statement and the statement of changes and equity. Then the balance sheet. Pui balance sheet. Balance sheet as at 31st December 2011. Then you know the topics: non-current assets, leave some spaces, 1, 2, 3, 4, 5, right, 5, 6, because here we have to deduct accumulated depreciation also, therefore leave more spaces, right. Then we have to have current assets, current assets 1 2 3 4 5 6 7, right, and then owner's equity. Owner's equity, we need only one line, then followed by non-current liabilities, only one item here, and then current liabilities. Current liabilities. Okay, then now move on to the trial balance and see the items we marked for balance sheet, right. Then non-current assets are land, include the land value here in the last column and tick it off. Building cost is included in the first column and less accumulated depreciation, which is included under adjustments. We worked out a figure. So, here we can just say accumulated depreciation. We do not have to state buildings, because we are now deducting from the cost of buildings. Amount is 4,000. Amount is 4,000. Then net figure is 76,000. This amount is called written down value or carrying amount, another term, carrying amount. Then next is office equipment. Office equipment cost 19,500 less accumulated depreciation, it is 1,950. Then last column, it is 17,500. I need another column, another line, that is delivery vehicle cost 30,000 and less accumulated depreciation, it is 6,000. 6,000 minus, then how much is the carrying amount? 24,000. Then we can find the total. Total is 217,550. Now find the items to be included under current assets from the trial balance. Items are inventory 31,500. This is an adjustment. Accounts receivable. Account receivable 10,185. Then accrued revenue. Accrued revenue, the amount is 450. Then cash at bank 15,440. Right. Find the total. Total is total is 57,575. Then now we have current assets and non-current assets. Then we can find the total here. It is C271 plus C275. 275,125, that is the total assets. Owner's equity, we know the figure. It is from the income statement of changes in equity. 161,575. Non-current liabilities, we have only one figure, mortgage, loan, only one figure, therefore last column, 105,000. Current liabilities include accounts payable, first column 4,500, more than one item under current liabilities. Accrued expenses, 4,050, 4,050 accrued expenses. Yes, this is the figure. Then only two items. Now we have included all the items marked for balance sheet, nothing left. 8,500 here, 550. Okay, and total double line and find the total. Sum C 280 to C 286, same figure, 275,125, and here also same figure. That means we balance the balance sheet. Balance sheet balance by itself. So this means we have recorded all the items given in the trial balance and also in the under adjustments correctly. Thank you.